you can potentially purchase a home on a 5% deposit without having to pay that lender's mortgage insurance.
So if you've got no deposit, it can definitely be trickier, and it does come with some additional risks that you need to consider, but it's definitely not impossible.
How much do you really need for a house deposit? Today I'm joined by Kayleigh Watkins, Westpac Home Loan Specialist, and Flaherty, Senior Economist at REA Group. We are diving into one of the most asked questions when buying a home. How much money do I really need for a house deposit? Let's start off with the basics. Kayleigh, how much of a deposit is typically recommended for purchasing a home?
Yeah, Alice, so let me just open by explaining what a deposit is. A deposit is the first lump payment you need to make when you want to buy a property. So traditionally, a 20% deposit is advised, so that's 20% of the total property value. So if you're buying a house for $1 million, that would mean you would need $200,000 as a deposit.
A 20% deposit seems like a really big hurdle to overcome. And how long does it typically take for buyers to save that?
Well, it definitely depends on whereabouts in the country you're looking. Nationally, the average is about 6 years, but in a market like Greater Sydney, we're looking at more like 10 years on average.
Well, let's talk smaller deposit amounts. What options exist for people who have less of a deposit saved?
There are options. I've seen buyers start with as little as a 5% deposit or less in some circumstances if they qualify for the government schemes that are out there. So a 5% deposit for $1 million comes in at $50,000. For example, some of my Westpac clients move forward with a smaller deposit of around 10 to 15%, so they can get into the market sooner. In these situations, they also pay lender's mortgage insurance, or what we call LMI.
Kayleigh, can you just break down for us what LMI actually is?
Yeah, absolutely. So lender's mortgage insurance, or LMI, is designed to help people get into a home sooner. So even if they don't have a large deposit saved, when someone has less than a 20% deposit, it means there's a bit more risk involved from the bank's perspective in lending to that person. LMI helps the bank manage that risk, which in turn makes it possible for Westpac to offer loans to more customers who might not meet the traditional deposit requirements. In simple terms, it's insurance that could allow Westpac to say yes to your home loan application, even with a smaller deposit. But it is important that our customers understand that LMI is an additional cost and comes with its own risks for the customer too. The lower your deposit, the higher the LMI. So if your deposit is below 10%, the cost of LMI can start getting really quite high, and that may affect what you can afford overall. That's why it's always a good idea to talk to a Westpac home loan specialist and a financial advisor who can help you understand the pros and cons, any risks, and what works best for your particular situation.
So, Anne, can you give us an example of government schemes focused on clearing the deposit hurdle and helping people get into the market quicker?
There's some good news, particularly for first home buyers who are struggling to get together a deposit. We have a couple of schemes, the First Home Guarantee Scheme and also the Help to Buy scheme, which the federal government has just expanded. What these mean is that for a first home buyer, you can potentially purchase a home on a 5% deposit without having to pay that lender's mortgage insurance. It's going to be expanded early next year, so it's going to be opening up to a much wider range of first home buyers as well. Another option is Help to Buy, which is where a buyer co-purchases a property with the government. The government takes around a 30 to 40% stake in that property, depending on whether it's new or established. And again, it's about enabling people to get in on a smaller deposit. And in that specific case, they don't have to pay back as much in repayments because they are co-owning that property with the government.
Okay, so a little bit of a rogue question, but can you actually buy a property with no deposit?
Yeah, so if you've got no deposit, it can definitely be trickier, and it does come with some additional risks that you need to consider, but it's definitely not impossible. So there are options such as guarantor loans or government schemes, which can tend to be typically aimed at first home buyers, low income or essential workers. Chatting with financial advisors or a Westpac home loan specialist early can reveal unexpected routes suited to your situation.
And aside from the deposit, there are other additional upfront costs, right? Because buyers might not actually be aware that they can't just add these to the loan.
Yeah, absolutely. So besides the deposit, there's stamp duty, which is potentially tens of thousands of dollars depending on your state and the value of the home you're purchasing, potentially lender's mortgage insurance or LMI, and legal costs. These can really add up, and because you need to factor these into your overall budget, it might impact how much money you have left over to actually spend on a property.
Finally, I know our listeners will appreciate a little bit of encouragement. Kayleigh, what's your number one piece of advice when people do really start to stress about that deposit hurdle?
Look, honestly, it's not easy. It is tough out there for today's buyers, but have the right planning conversations early with people in the know, like a home loan specialist at Westpac and a financial advisor. That personal one-on-one advice from someone that does this day in and day out can help you navigate that deposit situation.
Thanks for listening to the Buyer's Handbook. Join us next time for more answers on the topics that matter most. For more help with your property journey, head to the Westpac How to Buy Hub on realestate.com.au. Conditions, credit criteria, fees and charges apply. Residential lending is not available to non-Australian resident borrowers. This information is general in nature and has been prepared without taking your personal objectives, circumstances and needs into account. You should consider the appropriateness of the information to your own circumstances and, if necessary, seek appropriate professional advice.
Real Talk acknowledges the traditional custodians of country throughout Australia and their connections to land, sea, air and community. We pay our respects to elders past and present.